Investing your first $100,000 honestly kind of sucks. I'm just going to say it straight up. Because this is the phase where you're doing a ton of the heavy lifting, but the progress still feels very small. The first 100K is almost always the hardest milestone you will ever hit on your wealth building journey because the early years demand the most discipline, the most patience, and the most consistency at a time when it doesn't yet feel like your money is really working for you. One of my favorite ways to visualize this is through the classic compounding interest graph that shows it can take roughly 25% of the total journey to $1 million just to reach your first $100,000. And then the remaining 75% of the wealth happens on the back end. I'll put the graph on the screen here so you can kind of visualize what I'm talking about. For example, if you're investing $10,000 per year and earning around a 7% return, it takes you roughly 8 years just to hit your first 100,000. But after that, the momentum really starts to pick up and your next milestones come faster than most people expect. When you look at the historical progression, you can clearly see that the early climb is the steepest part of the mountain. So in this video, I want to walk you through exactly how I approached investing my first 100,000 and what exactly moved the needle for me and what I think matters most if you're currently in that early grinded out phase trying to get to your first 100,000. When you're starting from zero, almost all the progress is coming directly from your own effort, which means your savings rate, your income growth, your budgeting, and the willingness for you to live below your means are doing all of the lifting for you during this phase. They're doing all the work, especially at a time when it should feel much easier and much more socially acceptable to start upgrading your lifestyle. In your early years, compounding has technically begun, but it has not yet reached the point where you can feel its impact. So your portfolio is not doing much work on your behalf yet because the burden still sits on you. To put real numbers to it, if you have $10,000 invested and the market returns 10% over the course of a year, you're only looking at roughly $1,000 of growth, which is certainly helpful, but it's not going to really move mountains for you. Because of that dynamic, most of your net worth in the stage, again, still depends far on how much you personally are able to contribute rather than what the market is contributing for you, which is exactly why this phase tends to feel slow, grinded out, and at times a little discouraging. And on top of that, this period of life is often when your financial obligations feel the heaviest relative to your income, because you may be working through student loans, building up your emergency fund, furnishing that first apartment, buying your first vehicle, all while you're getting paid for an entry level job. One of the biggest psychological hurdles on the road to your first $100,000 is that compounding is technically doing exactly what it's supposed to do, but emotionally, it's going to feel like nothing is happening. It's going to make this stretch so tough, and it's honestly going to piss you off a little bit. You just have to understand that compounding is incredibly powerful over long periods of time. But in the early years, it is not going to look pretty. The growth is going to be quiet, and a lot of the momentum, again, is just going to be by your contributions. This is where the long-term thinking and your delayed gratification become absolutely critical. Because the investors who ultimately win are the ones who can stay consistent even when the short-term feedback is underwhelming. And if you've been following this channel, I don't like get rich quick schemes because while you can always chase the latest meme coin or maybe 1 out of 100 people get lucky, the path is unpredictable and it's not repeatable for everybody. The real beauty of disciplined, long-term investing in index funds is that it gives the average person a meaningful path to build wealth over time, which is exactly why patience in this earlier phase will pay off for you so much in your later life. Now, once you cross into the six-figure territory, something very meaningful begins to shift in your financial momentum because the market returns are going to start to play a larger role in your overall progress, and your portfolio finally begins producing gains that are noticeable to what you are personally contributing every year. This is the point where the snowball that once felt like it was being pushed up the mountain starts to roll back down with you. To put some simple numbers behind it, when you have $100,000 invested, a 10% market return is going to be about $10,000 a year, right? Which is the first time many investors start to see movement that's going to feel significant. Like $10,000 in a year is pretty good. As the portfolio grows, the effect becomes more and more and more pronounced. Because at $200,000, that same return of 10% gives you $20,000. You see what I'm going with this now. 500,000 becomes 50,000. And this is exactly why people at this stage often say that their money finally feels like it is working for them. However, this is also where many people unintentionally sabotage their own progress because a large percentage of investors quit, they'll slow down, they'll get distracted before they ever reach this point, the tipping point of hitting six figures. Some people get discouraged during the slow early years, and others allow their lifestyle to expand too quickly as their income rises. And many people just simply stop investing consistently because they don't feel great about that early progress and they just tapped out early. If your goal right now is to accelerate your path to that first $100,000 invested, the strategy honestly does not need to be complicated or flashy or built around trying to outsmart the market because I guarantee you, you will not do that. But it absolutely does need to be extremely focused during these early years. Because what most people underestimate is how dominant your savings rate is at the beginning of your wealth building journey. Your contributions will almost always outweigh whatever short term investment gains that'll happen before you hit your first $100,000. You need to figure out a way how to consistently invest every month and increase your contributions. That is what I did early in my career, and I'm so thankful for it. The encouraging part about this phase is that you do not need to pick the perfect stock to reach your first $100,000. What I did is I invested in VU, SCHG, and SCHD. Those are three simple, basic index funds. I invested in tax advantage retirement accounts, and I automated my monthly contributions to get me to that essential tipping point. What ends up mattering far more than being a finance savant is giving your money sufficient time in the market and having the discipline to show up month after month, day after day, especially during those long stretches when the progress feels painfully slow and the results are literally almost invisible to you. Staying disciplined day in and day out when it is not fun is exactly what's going to separate people who eventually build real wealth. And the people that don't want to stay disciplined are going to get stuck. And here's the irony when it comes to building wealth: the habits you wire into your life on the road to your first $100,000, the habits of automatically investing, saying no to lifestyle inflation, having patience, those are the exact same habits that carry you faster to that $200,000 mark, that $500,000 mark, and eventually that $1,000,000 mark. And ultimately, everyone's goal: full financial freedom. If you can master consistency while the numbers feel small, the later stages of wealth building become dramatically easier for you because you've already built the habits for success. And I want to keep this video short. That's all I have for this one. I would genuinely like to hear where you are at in your own investing journey right now. So drop a comment below and let me know whether you are just getting started, closing in on your first major milestone, or if you are already deep into that compounding phase. If you are at the very beginning, do not stress about feeling behind. Because with enough patience, enough consistency, and a long enough time horizon, statistically, you should be able to build nice wealth. Keep your eyes on the big picture and keep executing the simple plan and let time be your best friend. As always, I appreciate you being here. I'll see you all in the next one.